I think that the immediate question is the immediacy of how quickly the bill passes to the president's desk and how you see that happening.
Well, thanks, Ed. Glad to be here. So the next step here is for the House to take it up, and I think the House is considering its options, but I think we're basically at the finish line here. The House already passed a similar version of the bill called the Stables Act, and I think that we're very close here to having a bill that can go to the president's desk.
There is also a lot of parallel interest from our audience in particular in the market structure efforts that are underway. Do you believe or see the president considering packaging them together, the stablecoin legislation with market structure?
Well, like I said, I think the House is still considering its options. The issue with packaging them together is that the market structure bill has never been taken up by the Senate. It did pass the House in the last Congress, but it never passed the Senate or was even taken up by the Senate. And so you could say that the market structure bill is on the 10-yard line, whereas the market structure bill is really, just a few yards away from becoming law. So I think there are different stages of the process, and if they were packaged together, it would slow down the stablecoin bill. But those decisions still have to be made.
Let's just talk about what this could unleash if it does go forward. Stablecoins could swell to as high as $3.7 trillion by 2030. That's according to Citi. But are we seeing perhaps a delay in regulation elsewhere that could stymie that sort of growth? Citi saying, look, if we don't see others getting on the bandwagon here, it could be limited to just $500 billion.
No, I mean, I think that the stablecoin bill is very helpful. It provides regulatory clarity and stability for the stablecoin industry. Like you were saying, there's already something like $250 billion in float of stablecoins, and that's out without there being a true regulatory framework in the United States. Right now, the number one issuer of stablecoins is offshore. And what this bill would do is provide, like I said, the regulatory clarity and safety. It would bring the whole stablecoin industry onshore. It would enhance consumer protection. The issuers of stablecoins would have to get audited on a quarterly basis. Consumers could be confident that their dollar-based stablecoins were reserved on a one-to-one basis with actual dollars in U.S. bank accounts. And I think this would increase confidence in the industry. And I think that you would also see banks getting into the act. I think you'd see traditional financial players getting involved in it. And that's why the float is expected to grow from, call it, roughly 250 billion to trillions of dollars. And that would create more demand for the U.S. dollar internationally. I think you could see other economies start to dollarize from the bottom up as their citizens would prefer to use U.S. digital dollars as opposed to whatever fiat currency they're using. And that would create potentially trillions of dollars of new demand for U.S. Treasury. So I think this bill is a major piece of legislation. I think it's a fantastic bill just on its own. I think that the House should go ahead and take it up, and I think they will take it up, and I think they're going to put it on the president's desk very soon.
What about businesses taking it up? As you say, people waiting in the wings, reports, Amazon, Walmart wanting to have their own stablecoin issuance. What is the regulatory oversight going to be like? You say, of course, it's put in stone in terms of the law. What about the resources for the regulation? Because there's going to be a lot to analyze, it feels like.
Yeah, so stablecoins will be under the purview of the banking system, and banking regulators will look at that, and stablecoin issuers will have to go through a regulatory process, and they'll get approved. And like I said, there'll be quarterly audits. And I think that the bill will provide the framework that will give confidence to a lot of traditional financial players to enter the space. And so I think you're going to see new stablecoin products, and I think you'll also see stablecoins being used as payments. I think this is one of the really exciting things about the bill is that blockchain infrastructure will be used as a new kind of dollar-based payment system.
Yes.
That's faster, it's more efficient, smoother. It's a payment system of the future. It's kind of ironic that when the crypto industry really started with Bitcoin about 15 years ago, what was anticipated is that you would get a new kind of currency. You would get a non-fiat currency. But as it turns out, a really important use case of blockchains has been to support digital dollars, to support tokenized dollars. And I think you'll see the extension of that payment system online with that legislation. And that's a really exciting thing. We don't want this innovation being driven offshore. Right now, like I said, the leading stablecoin issuer is offshore. I think that you will see this be a new US-based payment system that emerges online.
David, I'm looking at, for example, shares of Coinbase and Circle and basically the market cheering the passage of the bill. You're basically talking about dollarization. And I wondered if you just reflect for a minute of how you feel that the final sort of composition of this legislation supports the goals, the bigger picture goals that you and the president had hoped for when you set out to do it.
Sure. So when the president first took office, and even before he took office, when he was on the campaign trail, he promised to make the United States the crypto capital of the planet, and to replace the approach of the Biden administration, which was essentially regulation through prosecution. I mean, the Biden administration was doing everything it could to drive crypto companies offshore, and he promised to change that approach and provide regulatory clarity so that the innovation could happen in the United States. And I think that, the Trump administration has done that. Even before this bill, the president had signed an executive order to make Bitcoin a strategic reserve asset, providing, I think, a kind of legitimacy for the industry that it had been seeking. We also have formed a president's working group on digital assets that's been systematically hunting down and eliminating some of these war on crypto regulations that have been impeding the industry. The bottom line here is that we just want a fair approach. What founders and entrepreneurs have been asking for is just tell us what the rules are and we'll abide by those rules. So we've been trying to provide that regulatory clarity. But at the end of the day, if you want to make sure that the rules stay stable for founders, you need to enshrine them in law. And it's great when you can get the various agencies and departments of the government to change their rules, to take up better rulemaking, and we've done that. But again, the way that you provide long-term protection against the return of a new Gary Gensler or something like that is you enshrine them into law, and that's what this bill, the Genius Act, would do, and it's also what the market structure legislation would do, and we want to take that up next, to be short.
Sorry to interrupt you. What is missing from the bill and what Democrats push for was specific controls on the president and president's family in their ability to move within the corners of the crypto market with which they're affiliated. There's a lot of concern that wasn't done. Is the concern justified?
I don't think so. I mean, so first of all, you should ask them what they're doing, because I'm not involved in any particular company's products. I'm just an innovation advisor. But my understanding is that what they've said is that the president's assets are in a blind trust. His sons are not in the government. They're adults, and they're allowed to engage in business. And they have a company, and I think that these are unrelated things.
You're an innovation expert, not just in crypto, but in AI too. We shift there a little bit because you've hunted down rules that perhaps weren't serving some in the business entrepreneurship in the US, for example, the diffusion rule. But what follows it, David?
Well, I think it's a good question about what comes next. I think the problem with the diffusion rule, this was the Biden diffusion rule that was dropped at the 11th hour by the Biden administration, something like 5 days before the end of their term. I don't think it was really thought through. It was overly burdensome. And what it did is it required every sale of a GPU worldwide to, it required a license from the Commerce Department, or one of several narrow exemptions that also had to be lawyered. And so this was just incredibly burdensome. I think it impeded the global, the U.S. semiconductor business and the U.S. data center business. I think it hampered its market share worldwide, which should be an important objective of U.S. policy, is for the U.S. to win the AI race by becoming the dominant tech stack internationally. So the diffusion rule, I think, would have shot our technology industry in the foot out of a concern to prevent chips from going to China. To be sure, I think that the leading American semiconductors should not go to China, but we have export controls on that. And I don't think we need a new global licensing regime on every single GPU transaction to achieve that objective.
David, Jensen Huang was on the show very recently, and he expressed his concern that Huawei has technology that is as performant as NVIDIA's H200. There had been a lot of focus on H20. I know that the Commerce Department has issued some assessment of how much Huawei can produce. I think they said 200,000 GPU capacity. But there are concerns that actually their ability to export to markets outside of America is much greater than that. What is your assessment of how China can compete with its own GPUs in markets outside of America?
Well, it is true that today China is supply constrained on how many GPUs they can produce. But I would expect that to change pretty rapidly because China has proven adept at working around our restrictions. And you saw that back in January, we had this DeepSeek moment where before DeepSeek, people thought that Chinese AI models were years behind. And then DeepSeek launched, we realized that maybe they're more like 3 to 6 months behind. I think today, China is maybe 1.5 to 2 years behind us in chip design, but Huawei is moving fast to catch up. And even before they fully caught up, I think you will see them exporting their chips for the global market. For example, there was a story out of Malaysia that they were creating a sovereign data center with Huawei Ascend chips, and that story got walked back because I think the government was afraid of the U.S. reaction. But it was a minister of the government who did announce that they were creating a sovereign data center using Huawei chips. So I think that we do have to be concerned about Huawei competing on the global market. They may not fully be there yet, but I would expect that to change in the future. And I think that if we're overly restrictive in terms of U.S. sales to the world, I think there'll be a time where we're kind of kicking ourselves saying, you know, when we're in all of a sudden Huawei is everywhere, we'll be saying, well, wait, when we had this whole market to ourselves, why didn't we take advantage of that opportunity and lock in the American tech stack? I think it's very important that when we think about our goals here with respect to AI, we want the American tech stack to win. We want it to become the global standard. We want to have the largest market share we can. We want all to be the partner of choice for the world. And I think it's a valid policy objective to prevent our leading edge semiconductors from going to China. But at the same time, we don't want to restrict them from going to our friends and allies. To be sure, we should name our security requirements, but our friends and allies are eager to comply with those security requirements. So I think we can achieve our objective here, our dual objective of preventing leading chips from going to China while also making the United States the global standard.